Good morning, everyone. If you can hear me and you can see the screen, kindly type a hi in the comments section. Hello, Metal Slug. Hey, Stone, good morning to you. Great. You're welcome. Is Khan around? Is Carrie around? Hello, Drew Hope. How are you today? I want to conclude that everyone can actually hear me and see the screen. So if there is no objection, I would get set to preside. Okay, great. Let's dive into the chart. The first thing we'll be presiding over is the pairs we talked about yesterday. And yesterday we were going to be looking at these pairs and how well they are doing and what our plans are going to be going forward. So we're going to be looking at UkOil first, since it's a popular demand in the forum, after which we move on to other pairs. So with no much further ado, let's dive into the charts. So the first pair we have here is the UK oil, and on the UK oil, we're currently profitable on the UK oil, even though price took us out at break even yesterday. We were able to coming back into the trade at this point, and we are around this area right now as price continue to find higher highs and high lows at this point in time. And as it seems right now, price is currently where it was the same time yesterday. And because of this scenario, we can see that there appears to be a multiple rejection of price at $115. As we can see, we saw the first rejection, we saw the second, then we saw one here today, and there is another one now, which gives us a clue into the indecision that has gripped the market since in the last 24 hours. So what this simply means at this point is that we really need to be very, very, very cautious at this point, as anything could happen considering the fact that that key level, that level at 115, $115 has been rejected multiple times. So what this simply means is that we have a selling niche around this area that has been holding, resisting the buyers in the last 24 hours. So in that regard, we need to be very conscious and at the same time move our stop loss to break even, mitigate against any risk of being taken out in loss. So now that we have this scenario, now that you have all moved your stop loss to break even, so what we want to do at this point is to identify how to guide action going forward. So if we bring out my line chart at this point, we definitely have a bullish trend line around here. Sorry. So I think it's like this. We have a bullish trend line here that will guide our actions going into the New York session. So what this simply means is that we only want to take advantage of trades right above that bullish trend line. That is, as you can see what has been happening since last week, so that price has continued to respect that trend line, and we want to use it as a guide going forward. So at this point in time, the expansion, the bullish expansion has been reducing. As you can see, it's different from what it was here. We saw the expansion here, we saw the expansion here, and the one that we have right now appears to be stalling at this point. So what this simply means at this point is that if we have a breakdown of that trend line, then we want to negate any bullish momentum below that trend line. Then we can be looking forward to a retest and structures that support a trend continuation to the downside. So with this information we have here right now, it is appropriate that we find a new key level to work around with going into the New York session. So if you allow me, we have one around, I think 114 will be most precise. We have one around 114. Hold on a second. 114 is around here. Okay. So if we bring out our candle chart back, we can see we had that rejection here, and then we had support, rejection, 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 support, rejection around this area. So this gives us a clue into how significant that level is at this point. So going into the New York session, we want to be using that level as our guide. And what this simply means at this point is that if we have a breakdown of that trend line, then we want to be using both the trend line and the key level as a guide for selling opportunities going into the New York session. So we want to see a retest of structure, and then we see patterns that support a trend continuation to the downside. So if we do have a what's it called, we do have that opportunity to sell, then definitely we want to be putting up a sell position right below that key level, which also shares a confluence with the trend line we identified earlier with a take profit right. So if we have something like this, we will be having a take profit right with the previous demand structure. If we look left, we can see that we have a structure we can play around with at this point. So let us aim at 109. Let's choose a psychological number, and then we aim at around, that's around 480 pips thereabout, with our stop loss right above that key level with around 70 pips. Okay, let's say 90 pips thereabout. So this is what we are going to be looking out for in the New York session. If we do have a breakdown of that trend line, then retest into structure, then we look for structures that support a continuation to the downside. So since we cannot really project this, we can't project this to be precise, let me just give us an area where we look for selling opportunities after the breakdown has finally happened. So let us look at this area between 114.5 and 113.5 area as selling opportunities going into the New York session. So with this spelled out, it will be more clear, and we can easily take advantage of that move if it finally happens. So that is that on the UK oil. So what we are saying here is this: we have two scenarios running. We're already running in profit in the buy position we took, and then we have moved our stop loss to break even. And one thing I was saying here is that due to the stalling momentum in the bullish, we might be seeing a bearish momentum very soon. As we can see, price continue to reject that $115 zone since in the last 24 hours, and because of that we might be seeing a breakdown of that trend line, after which we look for a retest of structure to join the decline to the downside. However, if price breaks above that 1115, then good for us, good for our buy position, as we will be looking forward to a retest of the structure of that 115 area, which might probably share a confluence with the bullish trend line we identified earlier. So we might be looking forward to something like this, where we see a breakout of structure and then price does a retracement into that structure. Then we look for bullish momentum, signs of bullish momentum from this area to add one more position to that buy opportunity trade. So we still have our take profit target here at $120. And one thing I would advise here is this: as soon as price breaks above this place and retest and moves upward, then we need to move our stop. Price breaks above, retest, then moves upward, then we need to move our stop loss to around $115 zone to lock in the profit we have gathered so far. So that is that on the UK oil. So we will be moving on to the US oil at this point. So moving on to the US oil, what scenario do we have on the US oil? Okay, on the US oil, we already have a trigger trade, as we still ride that buy opportunity zone we identified 2 days ago. And one thing that needs to be emphasized at this point is that we're still riding, price is still oscillating right above that demand zone at $110, and we still have our key level holding this price action around this area with our stop loss, a tight stop loss right below that key level area. So what we're going to be looking forward to going into the New York session, if we look at the structure closely, we can see that we almost have a similar scenario with that which we had on UK oil. So with this major bearish trend line guiding our action going forward, the tendency and possibility of a bearish momentum to grip the market is also very visible on the US oil. And one thing that we'll be using as our guide going into the New York session is this bearish trend line that I've identified here. Let me make it a little bit thicker so that we can have a visual grasp on what I'm talking about. So that is the trend line that we are looking out for. And one thing there is this: like I said on the UK oil, if we do have a breakout of that structure, then we have a retest of structure, then we could be looking forward to an opportunity to add a position at the site of a reversal pattern or structures that supports a bullish momentum to the upside. However, if we do have price continue to respect that bearish trend line at this point, then it is pertinent that we look for how to take advantage of that selling opportunity if it finally happens. So if you allow me, let us identify a very strong key level to guide our selling opportunity going into the New York session. So let us pull out our line chart to get a very specific entry point, and then we look left. What do we see? We see price right at 110.50. Do we have 111? Okay, I think we have structures here as well. So if you allow me, we place this here. That's right at 111.50, I guess. So let's give this a label for the sake of clarity. So we have $111.15. As we can see, price, if we go back to our candle chart, we have price resisted this area. It became a support at this area. It broke down of this area. It's somewhat resistance here. Then we broke down here. We saw multiple resistance at this point. We saw a resistant level here. We saw a resistant level here. So the likelihood of this area also being a resistance is also very high. at this point. So because of this information and that bearish trend line we identified earlier, we want to be using both these parameters to guide our action going into the New York session. So what this simply means is that if we continue to see rejection, sorry, hold on a second, please. So if we continue to see multiple rejections of this area, then we want to be looking for structures that support a trend continuation downward. That is, if we see a breakout of structure, a retest into structure, then we take the advantage of that bearish momentum to the downside. And what this simply means is this. The buy opportunity zone at this area would now be negated. One thing here is this: if we could allow price to run into our stop loss if you're already in the buy opportunity trade we took yesterday. So let's see. So how do we take advantage of that selling momentum if it finally happens? So I think the same entry point here still very, very reasonable at this point. If we see a breakdown of that level, let's have our stop loss very tight right above that key level. Then we have our take profit target right into a previous demand structure. We have a demand structure around here. I want to see how we could do that too. And if you look closely, we still have a demand. We have a bullish trend line that was identified on the daily time frame. Let me bring up the daily time frame so that we can see what I'm talking about. So we have that bullish trend line holding on the daily time frame. So there is a possibility that if price continue to reject that area, we could have price come back into that trend line where we'll probably be looking for structures. It's a trend continuation to the upside. So for me on the US oil, we really need to be very, very, very conscious on the US oil, as anything could any spike could send price either way. So I think this stop loss is too wide for us at this point. Let's see. A stop loss right below that key level will be most precise. Give me a moment, please. Let me readjust our entry point. So a stop loss right below that key level will be most appropriate at this point. So what this simply means is this: we need to hold on. We're not joining right away. We want to look for structures that support a trend continuation to the downside, probably in the form of a double top structure at this point. We could have a double top structure at this point. That is something like this. Then we look for breakdown of structure, we retest into structure, then we take that trade to the downside. So let us aim at this demand zone for the meantime, and let it be around 108.50 for the meantime, after which whatever happens afterwards, then we could do justice to that. But mind you, we're still in the buy trade right now, and we are still looking forward to the breakout of that trend line to take advantage of that, to be sure of that bullish momentum to the upside. So this is what our expectation should be on the US oil. I hope this is clear. Are there any questions? Hello, hi. Mambo, thanks for the compliment. I appreciate. Great. In the absence of no questions, let's move on to the next pair, which is USDJPY. Yesterday we talked about USDJPY, where we were expecting the bearish momentum on the USDJPY, and lo and behold, we have good news on the USDJPY as price has moved significantly well in our favor in the last 24 hours. And if you remember what I said yesterday, I said something like we're using this trend line, this key level, as our guide going into the New York session yesterday, and we had this bullish trend line as well, and we had a selling opportunity zone identified right around 127.500, which is around the major key level we're working with since the beginning of the week. So I was saying that we will be, price was around here at that point in time when we were talking, was around 127.1, and I was suggesting that we will wait for price to come into the sell opportunity zone, where we are going to be looking for reversal structures that supports a trend continuation to the downside. And though we had that, we had something that looks like a double top structure around this area, and we moved in. We saw that significant breakdown, and price moved. How many pips is that? Price moved around, let's see, like we are already like 90 pips thereabout on the USDJPY. So if you are taking that trade yesterday, kudos to you. That's a good one to you if you are taking that trade yesterday. However, there is still an opportunity for us to take advantage of that trade if we witness a retest of structure. Probably price come back into $128 area, 127.1 area, around this area, or price comes back, goes as far as the bearish trend line, after which we look for structure that supports a trend continuation to the downside. Our take profit target still remain at 125.8, yes, which is around 170 pips approximately, potential profit target. And then by now, if you are already in that trade, I would advise that you move your stop loss to somewhere above this key level that we identified here at 127.1. So this is good for us so that we can actually lock in any profit and we don't get stopped out unnecessarily on a loss position. So that is our expectation here on the USDJPY. So moving on, we're going to be talking about CHFJPY as well, where yesterday we were expecting a bullish momentum and price has continued to reject that new demand zone here on the CHFJPY. So what we want to be looking out for at this point is we want to be looking for a reversal pattern that will support a trend continuation to the upside. Although we have this impulse leg, we have the sharp rejection of this bearish trend line at this point. Price has moved up into this area. Then we want to see a high low at this point. After we look for a breakout of structure, then a retest into structure, then we can trigger our trade right on point at 132.050. So it's pertinent that we remain patient at this point, as we nearly need to look for confirmations in the form of whatever reversal pattern you can think of. It could be a 1 2 3 reversal pattern, inverse head and shoulder pattern, or probably the double bottom structure, or it could probably, we could have a long consolidation phase at this point where price form into a wedge, a rising wedge, or a pennant, whatever it is, before we see that breakout of structure at this point. So this is my expectation on the CHFJPY, and it is important that I had that there is a possibility that price could break down that demand zone, which will also share a confluence with the breakdown of that bullish trend line that we saw here. Then if we see a retest of this trend line and demand zone, then we can be looking for an opportunity to sell the CHFJPY going into the New York session. However, it is pertinent that personally I am still looking for a bullish momentum on this one, considering the long-term bullish momentum that started somewhere around 12th of May, besides same price, finding higher highs and higher lows at this point. So let's keep our fingers crossed on this one, and whatever happens, it is simple enough for us to get a signal on this one. So that is that on CHFJPY. Moving on to EURCHF. On the EURCHF, remember we took this bullish momentum We were expecting a bullish momentum with a take profit right within this area, but unfortunately, we were stopped out at break even as price broke down that key level significantly during the course of yesterday's trading session. And remember, I said that this key level around this area shall be our guide going into the New York session. And one thing I said is the key level coupled with this bearish trend line, as we have seen the breakdown of that key level, then we want to be looking for structure to go into that key level or that trend line, where we'll be looking for structure that supports a trend continuation to the downside. So we're still patient on this one. We're still waiting for price to come into that level, and if price doesn't, then we just pass this trade. We just need price to respect our structures. We wait for price to respect our structures, then we take advantage of it. However, if we maintain this bearish trend line, I will suggest that if we see price reject this trend line at one point in time in the future, then we could look for structures that support a trend continuation to the downside on this one to join the decline to the downside. So what that means that we will have to readjust our entry points to suit that structure, probably come down into 1.02750 and aim at our take profit target around that demand zone area. So this is what we're going to be looking out for in the New York session. Al Raja saying, what about cryptocurrencies? Which one do you want us to talk about? Can you please put a mention in the comment section so that we can see what we can do about that, please? So moving on to GBP New Zealand. GBP New Zealand has moved into break-even. For those who took the first trade, price moved into entry point, and we were expecting that price will continue to respect that bearish trend line, which, as with the look of things right now, we already have what looks like a break above that trend line. Now, what we want to be looking forward to, we're still bearish on this one. We are still expecting that bearish momentum to happen. So the first one is price should probably respect this key level, which is the neckline of the reversal pattern we identified earlier on in the week, where we see rejection of this area, probably a double top structure, breakout of structure, retest into structure, and then we join the decline to the downside. So my expectation on the GBP New Zealand is still bearish, and not until we see significant signs that price wants to go further up. And if price is going further up, we need to see signals, and then we will need to wait for confirmation before we join whatever bullish momentum wants to unfold before our eyes. However, I still remain bearish. I still expect that price will still come down into respecting this bearish trend line. So while we wait for that, we just remain patient and let's see how the GBP New Zealand plays out during the New York session. So moving on to XAUUSD. On the gold, you can see what has been happening on the gold since yesterday. We've been seeing bearish momentum getting hold of the market, as we saw after a double top structure we found there. We saw that decline, that sharp decline to the downside, though we saw a sharp rejection of that bullish trend line, and which was later followed by a breakdown of that trend line, and we saw, I think, 2 rejection of that trend line at this point, and I'm of the opinion that price is still going downwards. And remember, when we looked at the gold pair on Monday, we remember I said that the breakout of this bearish trend line was a sign that price is going to be going to the upside. However, we need to wait for a retracement phase, a significant retracement phase, where we look out for the culmination of that retracement phase to join a potential bullish momentum. Personally, I have a long-term momentum for the gold pair, and we identified this buy opportunity zone area, which also, if you look left, if you look closely, shares a confluence with that trend line that was broken sometime last week. So we might be having price do a retest into that trend line, after which we see that bullish move to the upside. If that does not happen, we have a key level right at $1,835, where if we see price do a rejection of that key level, we might be joining the potential bullish momentum that we've been waiting for since the beginning of the week. So the reason why we are not just joining here or anyhow here is just because we really need to wait for price to come down into to do a retracement into at least the golden zone area. And what do I mean by the golden zone area? The golden zone area is the 50%, between 50% and 78.6% retracement of the previous impulse leg. And this is the previous impulse leg we had, and we have our 50 right around this area, 50 to 78.6 around this area. So if you allow me to draw, we have something like this. Around this area is our key level that we can use to guide our action going. Sorry, let me just use this. So we have a key level, we have a golden zone around this area that could guide our price, that will guide our actions going forward. So we have a buy opportunity zone around this area, and if price breaks below, then we'll look for buy opportunity zone around this area. So on the gold, it is very pertinent that we remain very, very patient. And let's see how price plays out in the coming session. So this is this on the gold. Now, if you are a counter trend trader, I have lined up a precise entry point for you, if you don't mind, and that is around $1,844.236 and $1,843.220, where I'm expecting price to break down that trend line. We already have the retest of this trend line here, so I'm expecting price to break down this trend line, retest, then move further down into this area. So I'm having around like 2,400 pips take profit target, with a tight stop loss of 670 pips stop loss around this area. So this is what I'm looking out for. So if you're a counter trend trader, then you could take advantage of that move. However, if you're waiting for that long-term bullish momentum, then it's advisable that you just wait and let's see further confirmation that will support that bullish that potential bullish momentum we've been waiting for. So this is my scenario here on the gold, and then moving on to GBPJPY. On the pounds JPY, I remember we were taking out on the trade we took on Monday, where we had price continue to find lower lows and lower high. However, it's very, very important, and like I told you yesterday, I said I'm not going to do any sell on the GBPJPY unless I have a significant breakdown of that demand zone at this area, where we look for a retest of that demand zone to join a further decline to the downside. But as it is right now, I'm not going to think of any selling opportunity, as price is still right above that demand zone. We still have price oscillating right above that demand zone, though we have a very long consolidation phase at this point, which emphasizes the indecision that has gripped the market in the last 24 to 48 hours. However, now that we have a breakout of that key level one more time, and then we have a retest, then one thing I want to also be looking out for at this point is that if we look closely into what has been happening since in the last 48 hours, we can clearly see that we have a a bullish trend evolving behind the scenes around this area. We have something like this. We have a bullish trend line evolving behind the scenes, and that calls for concern at this point, as we might be the bullish move began anytime soon. So because of this information right at this point, I would like to also hold on to this entry point at 159.966 area, which was our first entry point during the week, and we aim at somewhere around 163.500, our take profit target, which is around 350 pips move. So what we want to be doing here is put your pen in order around this area, and let's see how price is going to play out. So going into the New York session, we have two parameters that will be our guide going to the New York session. So the first one is this bullish trend line, as we don't want to see price come below that trend line, go below that trend line. We don't want to see that, because we are only aiming for bullish momentum on this one. And the second parameter is the key level right here at 160 Japanese yen. We don't want to see price coming below that key level. We only want to see price right above that key level to be able to join and even add more position to this trade. So this is my expectation on the GBPJPY. So moving on to AUDCAD. We took AUDCAD yesterday, and we are still struggling on the AUDCAD, as price is still oscillating right around the key level we identified at 0.9090900 area. As you can see, price is continue to oscillate around that area. Even though we have something that looks more like a reversal pattern around this area, we see something like a double top structure, a lower high at this point. We're already in this trade anyway, and we're about 27 pips. So I'll suggest that we move our stop loss a little bit higher to the previous high around this area, which will give us around 32 to 35 pips, and then let's see how price reacts. Then one thing I will add to this is this: if price finally moves in our direction expected, if we see a breakdown of that bearish trend line, which is highlighted on your screen with the red line, then we look for, if we see a retest of structure of this trend line, then we can add one more position to this trade as we look forward to price hitting our take profit target at 0.89900. So on the AUDCAD, patience is still required. We still need to be patient on this one, and let's see how price plays out in the New York session. So that is that on the AUDCAD. So we're moving on to AUDUSD. On AUDUSD as well, where we hit stop loss on AUDUSD, as we're still expecting that bearish momentum to take advantage of. So what I'll be suggesting here is this: for further confirmation, we might want to be waiting for price to break down that key level. We look for a retest into that key level, after which we join that decline to the downside. Our take profit target still remains at 0.69400, which is about 120 pips. So like I said, going into the New York session, our guide, the parameters that will be our guide going to the New York sessions are these two. One, the key level at 0.7650, and then the trend line here, the tick trend line here, and as we want to be seeing price right below these parameters for us to be in this trade. So that is that on AUDUSD. So what pairs are we planning to look out for today? Khan is saying, Khan, here you are. I've been asking after you since morning. USOil. We did USOil a couple of minutes ago, but we can still do a summary. We can do a recap of that. I hope you are going to be around. to witness it with us? Flash money, I want to ask you something. What can I do with my credit? What credit? What credit are you talking about? Flash money? I'll be glad if you would shed more light on that inquiry. Okay, so let's look at Euro USD. Let's see what's happening on Euro USD. If there is an opportunity for us lining up on Euro USD. Let's go to the daily time frame and let's see what has been happening since the beginning of the year. We've been bearish since the beginning of the year, and we just had a breakout of structure earlier on this week on that trend line, which gives us a clue into a reversal pattern being confirmed at this point. So this is what we are loving right now. We have this reversal pattern with the trend line being our neckline. So something like this. So we might be expecting something like this in the nearest future, where price comes into that trend line to retest it, after which we might see a pattern that supports a trend continuation to the upside on the Euro USD. So with that information in hand, how do we take advantage of that move when it finally happens? So the first thing first we want to do is to identify a very strong key level that we can use to guide our actions going forward. So if we look left, we can see that at a point, though we don't have much, we don't have too many points to support this key level, but the little we have gives us something like this. We have around here to play with going into the New York session. So we have 1.06, which is also a very strong psychological level. Key level at 1.06. Okay, so let's just place it right there. And so this is what we have as our key level, and we want to see a rejection of that key level to support our move to the upside. So if we scale down to a much lower time frame, let's say the 4 hours time frame, let's see what we have here on the 4 hours time frame. Now on the 4 hours time frame, we already have a bullish trend line already that has been formed, and we're expecting this bullish trend line to be our guide going forward on the Euro USD. So what this simply means is that we want to be patient enough. If you are yet to take this trade, if you are not in this move, I know this is like how many pips move now. We have this is like 200 pips move. If you are not in this move, we still have another opportunity to take advantage of this move, and that will be in the form of a retest of this key level, or probably this trend line, after which we look for structures that supports a trend continuation to the upside. So on the Euro USD, we want to be patient and see how price plays out. However, it is important to take note that considering the long-term bearish momentum on this pair, you can see what has been happening on a long term. You can see it's a bearish momentum on a long term. Considering the long-term bearish momentum, we really need to be very, very careful where price action shares a confluence with the key level trend line, as the possibility of a breakdown of that trend line is very, very possible. As we do see a breakdown of that trend line, a retest into structure, and price might continue on that bearish momentum that it began earlier this year. So when price comes into the trend line or into that key level, we really need to be very, very patient, as we need to look for structures in the form of a reversal pattern that will support a trend continuation to the upside. So what I mean by reversal pattern is when price comes back down into this area, you might want to look for a double bottom structure or a inverse head and shoulder, where we look for a breakout of structure and we take advantage of that bullish move to the upside. So this is what our expectation will be on the Euro USD going forward. So on this note, I think we've done justice to our expectations for the day. However, we want to do a quick recap of what we talked about today. So the first pair we talked about today was the UK oil, and what did we see on the UK oil? We're already in profit on the UK oil. That is the buy opportunity trade we took yesterday is already in profit on the UK oil, and I advise that we move our stop loss to break even at this point, as we continue to expect the breakout of this $115 area and a retest, after which we look for structures that support a trend continuation to the upside. Mind you, the retest of this level might share a confluence with that bullish trend line, which I emphasize here, after which we look for structures that support a trend continuation to the upside to add one more position to this trade. And if you are not in this trade yet already, then you could add a position at a breakout retest of $115 area. Our take profit target still remains at $120. And please, as price moves further up, ensure to move your stop loss to guide your price, to guide your profit into the future. On the contrary, I made mention of the fact that the perspective of a selling opportunity is also evolving on this chart. As we can see, in the last 24 hours, price has continued to reject that $115 area. You can see we had multiple rejection of that area, which gives us a clue into the strength of the sellers at this point. As sellers continue to resist the buying potential in the market at $115. So if this $115 continue to hold into the New York session, there is a possibility that we might see a breakdown of that bullish trend line. We look for structures in the form of a retest of that trend line. Then we look for patterns that support a trend continuation to the downside. So I have said that if that selling opportunity finally, if price action evolves into that selling opportunity, then we want to be looking for selling opportunity right below that key level at $114. That is after the confirmation has happened. So mind my words, after the confirmation has happened, we want to be looking for selling opportunity right below that key level to take advantage of that momentum to the downside. So this is just this setup, this plan B is just something we keep at the back of our hand, just in case that bullish momentum does not happen as expected. So that is that on the UK oil. Then we talked about US oil as well. I don't know if you're still around. I want to do a revisit of that US oil once again. So on the US oil, we have the same setup, which looks more similar to what we have on the UK oil. And we already have our trade triggered on the US oil, and we're already running in profit on this one. And like I said, we should just allow this to play out. Or if you are very doubtful, you can move your stop loss to break even at this point, and then as we expect price to break above that key level at 115.500, and then probably a retest of structure or retest of this bearish trend line, and we look for structure that supports a trend continuation to the upside. However, like I said, considering this bearish trend line, the bearish momentum that gripped the market since the 17th of May, there is a possibility that price might continue to respect this bearish trend line, and we might see something like this and price goes further down. Or probably we could see a double top structure around here, and after which we see a breakdown of structure, a retest into structure, and price goes to the downside. So if that happens, when we have our entry point right at 111.06 area, where we'll be looking to take our profit at the demand zone right here at 108.5, or whatever place you think is most comfortable for you within that demand zone. It could be 109, whatever place is most comfortable for you, you could put your take profit target around that area. So these are the two scenarios we are looking out for on the US oil. So moving on to the next pair, we also talked about the USDJPY, where we are already in profit on this one. We're already in profit. Price moved as expected, rejected the key level, breakdown of the trend line, and then we are right here right now at about 70 pips in profit. And I also said for those who missed this opportunity and couldn't take advantage of that move, then we could be holding on to see a retest of structure around here to join the decline to the downside. Our take profit target still remains at 125.8, which is around $160 potential TP, and that is that for the USDJPY. So moving on to CHFJPY, I said I'm expecting a bullish momentum on CHFJPY, which appears to be holding right now. So one thing I want you to do at this point is I want to see another quick rejection of this area, price coming down into this area, that is finding a lower high, and then we can join. That is, if you are not already in the trade, you can look for, if price comes back down a little bit, then we look for rejection, then we can take advantage of that move. So like I said, I'm not looking for any selling opportunity on CHFJPY for now. We're still sitting right on the demand zone, and price has just broken out of that pennant structure, and we have a retest of that structure, and price is likely to move further up. Our take profit target still remains between 133 Japanese yen and 133.3 Japanese yen. So depending on you, or whichever favors you, you set accordingly. So that is that on CHFJPY. Now EURCHF, like I said, we missed, we were stopped out on the bullish expectation on the EURCHF as price broke down the key level, and I said breaking down that key level is more of a sign that the sellers are actually very strong in this market, and we were waiting for price to do a retest of that trend line to join the further decline to the downside. Now I just noticed something at this point. We have a very strong demand zone around this area, which has been holding price action since the mid of this month, and we have something like this, and it appears price has come back to respect that area. So one thing I'll be saying at this point is that I want to be changing my bias on this one. As we can see, we have something like this. We have a lower high, sorry, a higher low, which forms a double bottom structure, which is also a very strong reversal pattern. So what this simply means is that we will be having this area as our key level going forward. So that key level will serve as a neckline of that double bottom structure. So one thing we want to be looking out for at this point is we want to be looking out for a breakout of that structure. We want to look for a retest of that key level, which also shares a conference with the retest of that bearish trend line, after which we look for structures that support a trend continuation to the upside. So our entry point still remains around this area, or you can actually move it down into right above that key level, where we look for, where we look for, so we have our stop loss right below at around 30 pips. Then our take profit targets still remain within this area of 1.03500 and 1.04300. So whatever suits you around this area is comfortable for us to take our profit at. So that is that on the Euro CHF. So now moving on to GBP New Zealand, like I said, I'm still expecting that bearish momentum on GBP New Zealand. We took this trade 2 days ago or 3 days ago. We were in profits. We locked in some profits on this one before price moved back into our entry point. So right now, I'm expecting price to continue to respect this trend line, though we have something that looks more like a breakout of that trend line at this point, but we're still right under that neckline of the reversal pattern we identified earlier in the week. So one thing I want to be looking out for at this point, I want to be looking forward to a reversal pattern around this area to join the decline to the downside. So let me give you an hint into this. Once we have that reversal pattern happen, and then we join the decline, every time we see a retest of this bearish trend line, we take advantage of that move and add more position to the trade. Our take profit targets to remain at 1.91700, which is around 300 pips, take profit targets. So that is that on the XAUUSD. So moving on, sorry, that's on GBP New Zealand. So moving on to XAUUSD, we have our buy opportunity zones around this area, and we have one around this area which also shares a confluence with a possible retest of this trend line that was broken sometime last week. So prices continue to find lower lows and lower highs. So I'm expecting price to finish its retracement in probably this area or this area before we start seeing that bullish momentum to the upside. So if you are a long-term trader, you want to wait, it's appropriate we wait, and let's wait real good for that big move, when it finally happens. So that means we have to wait and see how price plays out into one of these areas, after which we look for structures that support a trend continuation to the upside. Then on the contrary, I also shared this opportunity here where I said for the counter trend traders, for those who want to take short-term trade, there is a possibility of taking a bearish opportunity on this one, as I placed a pending order right at 1844.037 and 1843.317. And why is that? We had a breakdown of that bullish trend line here. We had a retest of that area, and I'm expecting that price will break down that bearish trend line, probably do a retest of it and continue to the downside into this area. So we have a type stop loss at around 1850 or 1855 area, where we will be expecting price to crash into this level. However, it's all worthy to note here that this area being a demand zone, if we don't see price break down that demand zone, then this could probably be a reversal pattern for us to work with, in the sense that if we see a breakout of structure, then we look for a retest to join the potential rally to the upside. So that means the bullish momentum we've been waiting for has finally come. So this is my expectation on the gold. So now moving on to GBPJPY, our expectation on GBPJPY still remain bullish, with entry points right at 159.971, and we have this bullish trend line evolving. So what I said here on the GBPJPY is that we already have two parameters that will guide our actions going into the New York session, and the first one is this bullish trend line that is playing out here. We want to see price continue to respect that bullish trend line to be bull on this one, to be long on this one. And secondly, we have a key level right here at $160 and no 160 Japanese yen. So with this key level, we want to see price oscillate right above that key level to be comfortable in this trade. So this is my expectation here on the GBPJPY. Our take profit target still remains within 162.5 area and 166 area. So we really have a very wide take profit target zone. So I personally aimed at 163.5, which is around 350 pips from this area, from above the key level. So if I were you, have your penny order right at 159.979 right now, and let's wait for that move to happen. Like I said, I'm not looking for any bearish momentum on this one. as we're still oscillating right above a very strong demand zone that has been holding since mid-March of this year. So that is that on the GBP JPY. Moving on to AUDCAD, we said we are still struggling on AUDCAD. Price triggered, though we're still inside the trade already, and we can see price is still oscillating around that key level we identified at 0.909 area, and we have something that looks more like a double top structure around this area, which is making us still feel comfortable in this trade. I also added that if at any point during the New York session we see a breakdown and a retest of this trend line, we can add one more position at a rejection of this trend line on a lower time frame to aim at a take profit target at 0.89900. So that's that on AUDCAD. Then on AUDUSD, we got stopped out yesterday on AUDUSD, and we're still expecting that bearish momentum on AUDUSD. So I want to call us to be more patient on this one, as we need to wait for a breakdown of this key level at 0.7650. We look for a retest of structure before we can join the decline to the downside. So patience is hereby required on the AUDUSD. So that is that for today. I think I made some justice to the pairs, and I think everybody found this session exciting, and I hope you are glad that we've been profitable this week so far. And let's see what happens during the New York session, and by tomorrow we're going to take a look at our trades and get prepared for the Friday session. So thank you very much for being around. I really appreciate your presence, and on this note, I wish you best of luck and a wonderful